Okay, so hello everyone. This is the third video of level one about the stock market trading and investing. And in this session, we are going to learn about two concepts, moving average and Fibonacci retracement. Okay, so whatever the concept that we are learning, all are the independent concepts from the learning perspective, while we are going to apply most of them together, or at least three or four concepts together, to maximize our conviction before taking the trade. So let us move further. So what is moving average? Okay, so basically moving average is it basically in general it provides a kind of a some value, some average value in a given time frame. So for example, any stock which is trading um, maybe some today, suppose the stock price is 90 rupees, tomorrow 100 rupees, then 110, and another day 80 rupees, right?
Yeah.
So depending on their values, when we select the value, for example, if we are selecting moving value, moving average 5, that means it will show the average value of last 5 period. Okay, and the five and the period could be anything. Suppose if we are looking at the 1 hour chart, so it will show the average value of last 5 hours. If we are selecting the daily chart, it will show the average of last 5 days of chart. Okay, that is how it works. And in general, it reflects the mood of the market. Okay, so if the overall mood maybe last couple of days or couple of weeks or maybe couple of hours are in a positive direction, positive means it is going up, then it will show the positive movement. So I mean we don't need to calculate it. Once we apply this particular indicator in the chart, it will directly show them. So basically it's a help us in analyzing the chart in a quick and faster way. And at the same time, these moving averages also gives you a signal of buy or sell. Okay, as of now, just this is enough to understand how it will give. When we learn about the implementation, then we will see how to use these one. Okay, and these values are generally like you say 5, 13, 26, 50, 100, or 200. If you look at these numbers like 5, 13, so basically these numbers are derived in a maybe kind of a Fibonacci way, or the other way, the simple understanding is it is giving you a enough interval like 5, 13, 26, 50. That okay, in that way, when we select different individual intervals, we should able to depict or kind of predict that kind of certain interval how the market movement is happening. Okay, so in some specific scenarios like maybe commodity or currency markets, we also use the moving averages like 21, 34, and 55. So in which market what to use, when we learn about implementation, we are going to discuss about further. Okay. In general, there are two kind of moving averages. One is called simple moving average, like typically we say it SMA, or MA. MA is also well known. So SMA or MA is the same. We normally it is called simple moving average, and as I said, it simply gives the average of last five closing prices. Five closing prices depend on the time frame. As I said, if it is hourly chart selected, that means last 5 hours. If it is a daily chart, it gives last 5 days of average. Right. And other one is the exponential moving average. So exponential moving average is has the some formula. Okay, so the good part is we don't need to understand how the formulas are getting calculated. But if you are some mathematician, you wanted to know, then that is a formula like today's close into 0.09 plus yesterday moving average into 0.9. Okay, just for the mathematical calculation. But in reality, you don't need to know the mathematics behind that. You only need to know how to add them on the chart. Okay. Um, and in general, more weightage are given to the latest data. Latest data means when we are saying that okay, last 5 days. So that is the latest data rather than maybe last 21 days or 26 days and so on and so forth. And EMA typically used for a short-term average like 5, 10, 13, or 50. Okay, so sometime if you have a long-term investment and all, we use 100 and 200 also. So again, when we will learn about implementation, we will discuss more on how when to use which one. Some example of moving average. So this is the example of Infosys Limited. Okay, where it is moving average of 5, 13, and 26 are displayed. Okay, let me before moving further, let me quickly show you how to add this moving average. Let me open any chart, and here I'm selecting Infosys. So I'm opening the Infosys chart, and it is Infosys daily. Okay. Maybe lot some old analysis. I'll just remove them for a clarity purpose. And see, so here is the indicators. Okay, so we need to click there, and we can type here directly MA. It will give you moving average, right? So if we say moving average, and it will get added MA one time. So we need typically a 3 moving average just to plot on the chart 3 different values. So I just click 3 times, the 3 moving average value will get added. Okay, I'm just removing the old one. And typically we use 5, 13, and 26. Okay, so if you look here, MA by default it is MA9 value, and there are 3 icons against each entries. Some I kind of icon, and then some format and close. So we need to format it. So once we click on this format icon, format or kind of a tool or settings in the mobile phone, that kind of middle icon, then length here is nothing but that the period. So I select delete 9 and put 5 here. Okay. And also if needed, we can also select the color. Okay, if you go to the style, there are the color. So you are maybe free to choose the color based on your choice. So 5 average, maybe I'm just selecting the blue one. Okay, and then second we need to select 13 and then 26. So second one I'm selecting input as a 13, and style color, maybe I'm just giving a purple. And third MA I'm selecting as input 26. There is something wrong in my keyboard. And style, maybe I'll select as a pink just to differentiate. So I have selected, added 3 MA moving average and provided the value of 5, 13, and 26. Right. So this is how we need to add the moving average in the chart. How to use them, we will learn in few seconds. Okay. So as per the concept, it says that when a lower moving average crosses the higher moving average in an upward direction, it is called a positive crossover and considered as a buy signal. Okay, so with a lower moving average means any moving average which is having the lower time frame. For example, MA 5, 13, and 26. So MA 5 is considered as a lower time frame, lower value. 13 is the next higher, and 26 is the higher among these three. So what it says that any point of time, if the lower moving average, that means moving average 5 is crossing the higher, it is maybe 13, and again 13 crosses 26. So let us say in this chart what is happening. So I'm going here in the past where this is the corona situation where the stock prices fell down, and after that it started recovering. Okay, just for a time being, I'm just removing the candles. I'm hiding it for time being just to uh, see the only the moving average lines. So how to hide them? Against the name of the company, there is a icon. If I select it, it will be visible. If I just select one more time, it will be invisible. Okay. So as I said, the blue one is the 5 moving average, and the purple one is the 13, and the pink one is 26. So look at here what is happening. When the stock price fall here, and till the time till this lower point it fell down, and this is the time, this is the period where there is some positive crossovers are happening. When I say positive crossover means the moving average in lower time frame is crossing the higher time frame. Okay, so here if you look at the moving average of 5 is crossing in a upward direction of 13, and after this one the moving average of 13 is crossing over 26. Okay, so at this level the complete crossover is happening. That means 5 is crossing 13, and 13 is also crossing over the 26. Okay, so whenever in the stock market on the chart such kind of phenomena happens, it is in general called as a positive crossover, and it provides the buy signal. Okay, so buy signal means if we wanted to invest in some equity, some stocks, we can consider buying in that situation. So this is not the only one. This is one of the favorable scenario. Once more than one concept we apply, and then based on that we are going to take our decision of buy or sell. And this moving average positive crossover is one of the such criteria. Okay, along with that we will use some more criteria while taking the trade. As of now, just understand the concept of positive crossover in a moving average scenario. Is there any question from anyone about moving average?
Sir, I lost the connection in between. So this 5, 13 and 26, like what is that numbers you selected, like on what basis?
Correct. So these are the number it is already given. So typically these numbers are you can say is a subset of a Fibonacci number. And if you don't know about Fibonacci number, that is also fine. So basically, um, these numbers are selected to have a kind of a some interval. So when we say okay, 5 um, moving average 5 means what is happening recently. Recently means last 5 days what the stock market is saying. Okay, it is giving us a kind of a recent information. And when the recent information is uh, kind of superseding the old information. So when I say that okay, last 5 days moving average versus last 13 days moving average. Okay, so suppose last 13 days it is the market is showing something else, but in the recent one market is start telling you something else. Okay, so uh, so when it says that okay, the five the moving average line of 5 is crossing in a positive direction, that means the upward direction. So maybe I'll just show you the example one more time in the real chart. So I'm not sure where you got disconnected. So what I did, okay. So I went to, can you able to see my screen for,
Yes, yes.
okay,
I heard that. Yeah, I heard that you disappeared those candles, and then I was just wondering about this number of days. 5, 13, and 26 are the number of like the past
correct,
history for those particular days.
correct. So why
Yeah,
particular days
got
is,
it.
okay, so as per the kind, I mean, whoever has invented these moving average indicators, they have given us a uh, kind of a direct, they have done the real research and they have given the result. Okay, if you wanted to know about what is happening in the recent days and what is going to happen in future likelihood scenario, then add these three moving averages into your chart and wait for the positive crossover to happen. And whenever that positive crossover happens, based on that, you can decide of buying that particular stock, right?
So,
So
Sachin,
yes,
20 is not a Fibonacci series number, right? I mean,
it is not a directly
5.
Fibonacci series. I'm
Mhm.
saying that it is a subset of, I mean, similar to that number.
Okay.
Basically, it is giving you a certain kind of a healthy interval. Okay, based on that, we can choose to have. Okay, so it may be in, for example, a equity market, we can choose 5, 13, 26. Sometime in a commodity market, we need to choose maybe a 21, 34, 55 also.
Okay.
So these are the uh, kind of a back tested and proven some or those kind of either equity or commodity or currency. So 5, 13, and 26 are works well in the equity market. So when I say equity market is any company like Infosys, TCS, or any blue chip company. So moving average, I mean, it is a MA example as of for now, it is clear, or we have any more question on this one?
Yes, sir, clear for me. Thank you.
Okay, great. And similarly, the moving average, another example of negative crossover. So it is just opposite of that. Whenever there is a negative crossover, that means the lower time frame moving average is crossing, uh, the higher moving average in a downward direction. It is called a negative crossover, and it considered as a potential sell signal. Okay, so this example is Adani Enterprises, which is the kind of a latest example. So whatever the news has came into, I mean, we came to know via news that okay, there has been a market crash or Adani, I mean, shares are crashing, etc., etc. But before that, if somebody following the chart, it has already I mean, shown in the chart itself. So negative crossover happened here. And when, I mean, as per my observation during that time, the news came out in the market sometime here, and this is the daily time frame. So what I'm trying to say is the chart movement or the chart has shown those indicators well in advance before the news came to the generic public, okay, via various media sources, right? So especially when anyone is, you or anyone is trading in the stock market, that is my personal experience and suggestion is that do not follow that news so much, because news is the last things to know. I mean, many a times news is created by the company so that we can take a call based on those news, etc. But once we know about the technical analysis, those well ahead of those news, etc., we should able to analyze the chart by ourselves and able to take the decision by ourselves well in advance. Okay, so news things will, I mean, came here. I think it is, and the negative crossover already happened. I think around more than 2 weeks in advance. Okay, where the five moving average of 5 is crossing over in a negative direction of 13 and again 26. Okay, so this was the time frame. All right. Next one is the exponential moving average. So exponential moving average is again the similar, I mean, same thing. The only the some calculations are different inside, and how to add them in the chart. Maybe if I select the any other, let's say Bajaj Finance. Okay, so if I select the Bajaj Finance, and again I will go to the same indicators and add EMA. Okay, so here it is moving average exponential. So in investing.com, it is moving average exponential. It is just, it's the same thing. It is exponential moving average only. Maybe in trading view or some other places you may find exponential moving average, but both are the same thing. Either moving average exponential or exponential moving average. So I'm just adding 3 times, clicking 3 times, and 3 EMA get added. Okay, and again the time frame, I can, so EMA basically, if somebody wants to trade for a long term view, maybe, okay, the long term investment, maybe I can say, when I say long term means at least a couple of years, minimum 1 year to 3 to 5 years. So even it is not also, it is basically a medium term, but minimum long, whenever we wanted to say, I mean, do the investment, minimum view is at least a year or a couple of years. So when I add year, and then either I can add, I mean, not either, we need to add 50 and 100. So I think 2 is enough here. So I will make an input as 50. So I'll replace 9 as a 50, 1 EMA, and another 9 with 100. So this is Bajaj weekly time frame. I'll just select it as a daily. Okay. So this one, EMA use of this one is very simple, right? So this is again the COVID fall time. And as per this concept, what it says that for a long-term investor, it gives the buy signal when 50 EMA did positive crossover with 100 EMA. So in this example, maybe I'll just change the color so that it will be clear. I'm just doing the 50 is a red one and the 100 is purple. So you can see here, this is the place where the 50 EMA is crossing over the 100 EMA. Okay, that is a positive crossover is happening. So this is the another kind of very simplest way of doing the long-term investment. Whenever you find in a daily time frame, basically. So whenever you want to say the long-term investment, time frame should be daily. So in a daily time frame, if a positive crossover is happening, that means if 50 EMA is crossing over 100 EMA in a positive direction, it is again a potential buying signal, and one can decide here to do the trades by buying that particular trade. And again, it is not the only one. This is one of the indicator. While taking or investing or trading, we need to have few more conviction, and how to use them more than one, we will learn during the implementation session. So as of now, just learn about individual concepts, how to use that indicator, how to add them, and what is the positive indicator, when to, where it is called as a buying signal, where it is giving the selling signal, etc. Okay.
Hey, Sachin, I thought you said that EMA is used more for shorter time period, but you are, or did I hear it wrong when you were giving the definition earlier?
No. So EMA, when I said EMA, so there are the two kind of, in initial exponential, I gave it, this is a calculation. I mean, what is the simple moving average, what is exponential? The usage.
No. So I'm saying on that, but on the example, the EMA example, you said 50 and 100.
Yes.
Whereas in your definition, you say typically used rather with smaller time frame. No, so I got an impression that as simple moving average is more for, say those Fibonacci is 5, 13, 20, 21, something like that. Whereas EMA is more like, see the last line typically is for short-term averages 5, 10, 13. But the example that you said that, for 50 crossed 100, I mean, that was rather used for longer.
Yes.
So whether people use it more for long-term average or short-term average, EMA.
Okay. So let me make it maybe clear. So EMA and SMA, like moving average or simple moving average or exponential moving average, both are used. Both can be used for any time frame. What the example I said that just based on these two indicators also, one can choose for the long-term investment. When I say long-term means typically long-term considered as a couple of years, maybe 3 years to 10 years, etc. Okay, but even the medium term, like at least a year also, we can use that these two indicators for the investment purpose. So when we are using these SMA, we are typically using the smaller values for our analysis purpose, like 5, 13, 26. When we are using the exponential moving average, we are using for the like the example is when I showed this is for long-term example, but here is that short-term examples are also, I mean, there. This is a typical example. The example I gave in the thesis example, that is for the long-term one. Long-term means is a like 50 and 100 I have used for in this example where it worked well. Okay, so I'm not depending on which stock or where we are using. So that difference will be there. So whenever we are applying, for example, somebody may be trading SBI. There are a lot of people who trade SBI. I mean, I personally don't trade in SBI. So there, what I have seen that it works in a shorter, I mean, short terms. For example, 5, 10, 50, 5, 10, no, not 10, 5, 10, and 13, 15. Yes. But this example I have shown, there's a thesis here, which is the kind of 50 and 100. It worked perfectly well. So when we are doing the analysis for any chart, we are applying these concepts and we are saying, okay, which one is working. For example, here I have chosen the Bajaj Finance. Okay. So in this example, Bajaj Finance also, as per the historical data, the 50 and 100 is also working very well. You are getting my point, Shibu?
Yeah, I got it.
Yeah. So as of now, maybe let us understand their like usage and how to add that. When we start trading, and maybe based on individual have their some favorite stock. So which specific time frame is working? Maybe that for that particular stock we can tweak that. Okay, which time frame is working well? So we need to have a few combinations, and then based on that we can decide. Okay, which one is working closely as per the individual selected stock. Okay. So in this example of the Bajaj Finance, what the example I'm saying that okay, the EMA 50 and 100, so it is working very well, and based on these indicators also this is giving a in kind of a conviction that yes, we should able to invest, provided we have some more conviction. And what are those conviction that we will learn in doing the implementation sessions. And similarly, this is the EMA of positive crossover, and similarly we have a negative crossover EMA example, where a lower lower, yes, not MSC, lower EMA crosses the higher MA. So basically this is the kind of typo error. It should be EMA. So wherever a lower EMA crosses the higher EMA, that is called negative crossover, and it gives the potentially a sell signal. So if you look at here, I have selected the Wipro, and in Wipro, Shibu, I have given the same example which I have added. So it is a 5, 13, 26, and 50. Okay, so and this one in Wipro, the 5, 13, 26, 50 is working well. So wherever if you see there is a negative crossover is happening, it is giving a sell signal, and this is the recent example of the Wipro. I mean, last many months, I think more than 6 to 8 months, Wipro is in, I can say, downward trend, and every time it is a negative crossover is happening, the sell signal is happening, which is working perfectly well till last month. After that, what is going to happen? I mean, we don't know, but till that, since last 8 months, it is in a downward direction. Maybe by end of this level 1, we should able to understand that, okay, what is the currently happening, maybe when it is giving the reversal signal. Okay, so this is a negative crossover of the EMA, and yes, EMA-based entry and exits. So I mean, just by looking at the EMA value, also we can able to decide that, okay, we should able to take a entry or maybe exit. So this is another example of Tech Mahindra, where I have added 50 and 100, and based on this EMA positive crossover, if you look at here, it is giving a positive crossover. That means entry means we can decide to buy the stock at the positive crossover, and when there is a negative crossover, we should able to exit it. Right. And as I said again, I keep on saying this is the one of the conviction, not the based on, I mean, we should not trade only based on only one conviction. At least we should be having a couple of conviction to take the trade or maybe do the investment. Okay, so this is about moving averages and the exponential moving average. The next concept for today is the Fibonacci retracement. Okay, so Fibonacci retracement, what it says that whenever any stock price is either going up or down, even an outperformer or underperformer, it doesn't goes in a straight direction, in a straight line. Okay, so even any stock is moving up and up and up, while moving in an upward direction, it takes some intermediate rest. Okay, there are only very few stock which goes very straight, okay, without taking a much of rest. At the same time, any stock which is going very straight quickly, it also comes down in a very quick movement, doing the quick movement only, right? So what is happening that, for example, let's take example of outperformer. Okay, let me take any example. Please select, please share any one of your favorite stock which I can able to show. Maybe let us say Tech Mahindra. Okay, so this is Tech Mahindra example in the daily time frame. So what is happening here? This after COVID scenario, I think most of the IT stock went up, and Tech Mahindra is also one of them. So even the stock prices is going up and up, maybe from this point to this point, it is went up in a straight direction, and again in between it took rest. Okay, so came down, just down, and okay, and again maybe from this point to this point, it went up in a straight direction, a straight upward direction, and again after that it is again coming down. So what moving Fibonacci retracement says that any stock price, when it is moving in an upward direction or downward direction, it doesn't always moves in a straight. It moves up and takes some rest in between, right? the main thing that, okay, whenever it takes the rest, how much rest is called as a healthy rest. Okay. So maybe while taking the rest, maybe how much percentage basically. Okay. So that Fibonacci retracement is suggests that the while taking the rest, there may be a, if it is a 50% down, for example, any stock price moves maybe from 50 rupees to 100 rupees. Okay. So that means 50 to 100 rupees is kind of a 100% movement, right? But when it is taking the rest, how much rest is called as a healthy rest. So what it says that if it is taking the rest back up to 50%, for example, it moves 50 to 100 rupees, and from 100 rupees, if it is coming back up to 50% down, 50% down means up to 75 rupees. So that will be treated as a healthy rest. Maybe up to 75% is still, we can say that it is still taking the rest. Most probably it will go in a upward direction only. But whenever it is going beyond 50% down, so we should be cautious, okay, by thinking that it may be a correction phase. That means it may change the direction for a certain period of time, and what will be the period that we don't know. So suppose if we have done any investment in a very good stock, very blue chip company, very known company also. So my personal theory is, my personal, I can say, I have developed for myself. If any stock is falling more than 20%, any point of time, I exit completely. Okay. But suppose you are in the trade, okay, in the maybe short-term trade. So maximum point we can, and we are in a very good company. For example, like any blue chip company who has a very good performance, I mean track record, blue chip company, maybe like TCS or Infosys, who are there in the market since many years. So for such blue chip companies, we can say that, okay, maximum 50% retracement will be treated as a healthy one. Beyond that, it may be the huge correction phase, and we should be exiting immediately. All right. So overall, the concept I'm just repeating is that, okay, it even it is a very good companies and keep on moving, but it will definitely take the risk. Very few exception will be always there, but no matter which company is there, the intermediate text rest means the some correction will happen. While moving up, it will come down in between, and again before moving further, it will take some level down, maybe 10%, 20%, or up to 50% is treated as a healthy, and beyond that, it will be a reversal. And we can wait. And there are certain indicators which help us in calculating the retracement value, and that retracement, or the tool which is help us, it is called a Fibonacci retracement tool. So how to use that, maybe I'll just quickly show you. So let's take example of same the Tech Mahindra itself. Right. So after, hope you guys have done the support and resistance. For example, I'm just doing here this putting support and resistance. So this is the all-time high. I just put one resistance on the top, and maybe some support line wherever applicable, support resistance. This is under resistance, and this is one more resistance, and here one more support. Okay. So how to put Fibonacci retracement is so 1, 2, 3, 4, 5, 6. So this is the 6, and then 7, not 7, 6 one. So 6 in the left hand side menu bar, or like I said toolbar, there is an option from where we can select. Now this will be here on, not 6, this 7th one. Where is the Fibonacci retracement? Is gone. It should be here or here. No, it is sorry. It is there in the third one itself. So in the third toolbar option, if you see here, there is a call Fib retracement. So that is the tool we can directly help us in calculating the value of how much percentage is falling down. How to use that? Just select on the Fib retracement tool, and this is the uptrending stock. So the first click we need to do on the top of the uptrending when where it has reached. So for example, we are somewhere here. So we can click on the level where it has reached, the first click, and second click we should be doing till the point it has fell down. Okay. So I have clicked here. So looks like there is some issue in investing.com, because if you can see this this rainbow kind of lines, the lines are there, but it is not displaying the value. Okay, just to display the value, maybe I need to use the different chart. So I will use the chart from Zerodha. Sometime investing.com may be having some technical issue. It is not showing that percentage. So I'm just opening the chart from Zerodha account. So whoever has Zerodha account, I hope you at least you are logging there and you know how to use that particular trading account. If not, then there might be a you can directly call them to the Zerodha customer care, and they should be able to help you. Or if needed, we can have a separate discussion of how to use the trading account. So this one, the chart I have opened from the Zerodha account. Okay, I'm just doing some formatting of, and this is again the daily time frame. So we are discussing somewhere here, right? So again, I'm going to the same indicator one. So this is the Fib retracement, same tool, and I'm doing the first click where till the time it reached maybe the top value on the way. So this is the top value, and second one click I'm doing wherever it has fell down. If I zoom to the chart just to see the various value, okay, so I think I have zoomed. Sorry, sorry for the mistake. I have not placed it in a right way. So this is the uptrending one. So the first click I should be doing at the bottom from where the stock price started moving up. Whatever I have done, that is a reverse way I have done that. Okay. So first click at the start, and the second click I will do wherever it has reached the upward direction. So on the way of moving up, it has reached here. If you look at here is my the top point. So from there I will see that okay, how much the negative movement is happening, right? That means the negative, downward direction. While going up, how much fall is happening. So if you look at, this is the 0 point, and the here 0.23 means the 23%. So these are the various level. Okay, so Fib retracement is also whatever the values here or the percentage value, it also gives you the kind of a support. So that means whenever any stock is falling, it may fall at these levels, either 23% or 38%, 50%, and so on and so forth. So as per the Fibonacci retracement concept, the healthy retracement, if it is falling up to 50%, that means 50% is green line, it will be treated as a healthy fall. Okay. And if you look at this in Tech Mahindra, the fall is happening somewhere nearly 23.6% only. So it has fell down, maybe done some you know false breakdown of 23%, but again took the support and moved up further. So it has not moved uh, beyond 23%. Okay. So that is how the Fibonacci retracement is going to help you to understand that, okay, in a upwarding trend stock, if any reversal is happening, it is a healthy reversal or unhealthy reversal. I mean, that is what we need to learn out of this Fib retracement. This is the same example which we have already discussed, how much percentage is fall. So the highest level of, and it is retracement level, and from there it took the support and move further. This is another example of no, ICRC Bank, which is the kind of a recent example of last couple of weeks back. Yeah, same thing. And now the Fibonacci retracement example of the downtrending stock. So if you, this is example of NTPC, where this was the highest level, as you see, and then the in a falling market also there is a retracement is happening. So it fell till this price point and again it bounced back. It is called retracement level, and further it again fell down till this level, right? So whenever it is happening in a downtrending market, how to apply that chart, maybe how to put the tool onto the chart. I can show you in the chart itself. So if you have any favorite company stock, feel free to share. Otherwise, I will just take the example of based on my memory. So let me take the example, maybe suppose BHEL. Okay. So yeah, BHEL daily chart. Let's take the example here. Okay. So let's suppose from here the market is falling. So again, I will choose the Fib retracement tool from here. Because it is a falling market, so I will choose the first point from where it has started falling, the first point, and the second click I will do from here. It does the reversal. Okay, here I'm doing the second click. And if you look at in this particular example, so on a daily time frame, in the same day, it has I can say traced back 50% or even more than 50%, but it doesn't sustain. Okay, it crosses more than 50% also, but it is a kind of a false one. If you see, here is the it's a kind of a inverted hammer. Okay, so that's the reason I said that, okay, along just by looking at only one indicator, we are not going to do the trade. We need to have more than one. So here the retracement is happening more than 50%. So as per only Fib retracement, it looks like that, okay, we need to exit our position. For example, somebody has sold the BHEL here. Only based on Fib retracement, you could have exited here. But based on the candlestick pattern, what we learned in the initial session, or I can say last session itself, that if there is an inverted hammer is happening and which is kind of a top of the trend, it will be treated as a reversal. So Fib retracement is giving us another signal, and the candlestick pattern is giving us different signal. So in general, when we are getting two different views in the same market and two different is not aligned, they are giving a different signals. It is in general recommended that, okay, not to trade, just hold on. Okay. But this is the another classic example where 50% retracement is happening, but still it is continuing in the same direction where it used to, move further. So before this point, it is moving the downward direction. Again, after 50% retracement, also it is moving in downward direction. But in general, as I said, Fib retracement is up to 50% is treated as a healthy retracement. Okay. I'll just show you maybe a few more example. NTPC is done. Yeah, there is maybe one more example of fib retracement where 50% retracement level is happening. So let me show you another example of, let's say, NTPC only. So this is daily time frame, and yeah. So till 2020 or even 21 also, it was in a downtrending stock, but after that it has changed its direction, right? So let's say that fib retracement. So from example, from here to this price, this level, it is moving up. So I'm just putting one first point here and second point on the top. Okay, and if you can see here also, right? From top it has retraced, but the retracement level is not 50%. It is below. Before 50%, it is around, I think, 45% or so. And again, it has started moving up. So wherever it is not reaching 50%, we can kind of safely assume, again, along with some more indicator, which again we are going to learn. So in next couple of sessions, still we are learning few more concepts. And in the implementation session, we are going to apply them together to have a strong conviction of buying or selling. Right. So this is the end of the today's session about two concepts like moving average, exponential moving average, and the fib retracement. If anybody has any specific question, feel free to ask. I will try to help you in case of any confusion on these two concepts, whatever we have learned today. Any question from anyone?